1999, the framework for the preparation and presentation of the financial statements was issued, but then International Accounting Standards Board made amendments to it, and the new, although unfinished framework was issued in September 2010 with a new name, the Conceptual Framework for Financial Reporting. And it stayed in progress for many years, and then in March 2018, the final version was issued with everything completed. So let's take a look. Well, the new framework has 8 chapters in total, and here's the list, and we will take a closer view at each chapter. So the first one is about the objective of general purpose financial reporting, which is to provide financial information about the reporting entity that is useful to existing and potential investors, lenders, and other creditors to make various decisions. For example, about trading with equity and debt instruments, providing loans, and so on. So what financial information shall be reported in the general purpose reports? Well, note that we are not talking about the financial statements yet, because they are subject to Chapter 3. So the entity shall present the information about its economic resources and claims, which is basically a financial position, then changes in economic resources and claims resulting from entity's financial performance and from other events. Well, financial performance shall be reflected by the accrual accounting, so in the periods when the effects of the transactions occur, regardless the related cash flows. However, information about past cash flows is very important to assess management's ability to generate future cash flows. Chapter 2 discusses qualitative characteristics of the financial information so that the information is really useful for its users. And there are 2 types of characteristics, fundamental and enhancing. The first fundamental characteristic is relevance. So relevant financial information is capable of making a difference in the decisions made by the users. And here the concept of materiality applies, so the material information should not be omitted. And the second fundamental characteristic is faithful representation. And financial information must not only be relevant, but must faithfully represent what it aims to represent. So therefore it must be complete, neutral, and free from error. And financial information shall have both fundamental characteristics. Enhancing characteristics are comparability, so information should be comparable between different entities or time periods. Then verifiability, independent and knowledgeable observers are able to verify the information. Timeliness, information is available in time to influence the decisions of users. And understandability, so the information shall be classified, presented clearly and concisely. And enhancing characteristics shall be applied to the maximum possible extent. Chapter 3 is about the financial statements and the reporting entity. So here we are focusing on the financial statements, not just the reporting itself. So the relevant information is provided in the statement of financial position by recognizing assets, liabilities, and equity, in the statement of financial performance by recognizing income and expenses, and in other statements where you show the information about recognized and unrecognized assets and other elements of the financial statements, cash flows, contributions from and distributions to shareholders, assumptions, methods used, judgments applied, estimates, and other relevant information. Financial reports are always prepared for a specified period of time, or the reporting period, and going concern assumption applies. Well, it means that an entity will continue its operations in the foreseeable future and will not liquidate or materially curtail operations. Well, if you're not a going concern, then you should report under different bases, and you can check out ifrsbox.com. I have one Q&A session where I answer specifically how to report when you're